So it's been just over 3 weeks since all of the Yotta Bank patrons' accounts were frozen, and I wanted to share briefly what happened and how this has changed the way that I view my savings accounts, checking accounts, and what I'm going to do about it. This is not financial advice, but this is just what I'm doing. So Yotta Bank, if you're not familiar with it, it is a online bank, in quotes, that was pushed big by different finance YouTubers as a fun way and an easy way to save money. Essentially, it was marketed as a bank account, which is fine. And then what happened recently was, since it's not actually a bank, in legal terms, they're just a technology company. They use a third-party vendor to handle some of their transactions, and this vendor is called Synapse. Anyway, Synapse on May 11, they filed for bankruptcy, resulting in all of the Yotta accounts being frozen. So if you're a person and you have a bank account at Yotta, since May 11th, you have not been able to access those funds. And so for people who have all of their money in Yotta, that's been obviously a huge issue because they haven't been able to pay their bills or get paid, what have you. And so this has affected the way I look at my bank accounts because before I didn't really care if any of my money is in an actual bank. But after this, I looked, and for example, I'm a big fan of Wealthfront, which is similar to Yotta, except it's similar to Yotta in the way that it's a fintech company and not actually a bank. And so through this happening to the people at Yotta, I found out that Wealthfront also is just a fintech company and it's not actually a bank. So theoretically, if something were to happen to Wealthfront's vendors, the same thing could happen to me, where all of my money that I have in Wealthfront, I would not have access to. And so as a result of finding this out, I am going through all of my different bank accounts and understanding what the partner banks or underlying banks are, and making sure that I have my money that I need kind of quickly to pay bills, that is spread across a couple of these different banks. So if one of them fails or one of them gets frozen, that I have access to my money and I can pay my bills and get paid. And so that's what I'm doing about that. And a lot of people have asked about FDIC insurance online, and what I've seen about this is, because the bank hasn't actually failed and it's just a vendor handling the transactions between the fintech company and the bank, FDIC insurance does not cover what's happened to these people. So with that in mind, in my mind, I've always kind of used FDIC insurance as a way to justify me keeping all of my funds in one account. But now that we've seen, kind of the worst case scenario or close to worst case scenario of what can happen, I think that it's going to be best for me if I don't keep all of my money that I need, all of my checking account money essentially, in one bank.